All right, let's talk about a really weird day on Wall Street. A day where the headlines were screaming record highs, but if you actually owned most stocks, well, you probably ended the day down. It was a classic tale of two markets, a real head scratcher. So we're going to dig in and figure out what on earth was really going on.
So let's set the scene. The day is Monday, September 22nd, 2024. And coming into the day, things felt a little tense. There was some nervousness in the air, mostly because of some political drama brewing in Washington. But then, right in the middle of all that anxiety, one single piece of news dropped and completely changed the game.
And this is the central puzzle of the day. You look at the headlines and it's all celebration. The market hit a third straight record. Awesome, right? But then you look at your own portfolio and you see a sea of red. Most individual stocks actually went down. So how is that even possible? How can the market be at a record high if most of it is falling? Well, it all comes down to the incredible power of just one company and one absolutely massive deal.
And that brings us to the main event, the reason for the whole market's split personality, the $100 billion AI catalyst. This wasn't just a big announcement. It was a market-moving earthquake, strong enough to drag the entire index up while everything else was trying to sink.
I mean, just look at that number, $100 billion. Let that sink in. This isn't just pocket change. It's a statement. It's some of the biggest and smartest players in the world putting an astronomical amount of money on the table, and it was enough to completely change the direction of the day. So what exactly was all this money for?
Well, it was for this, the AI data center deal. Basically, NVIDIA, the undisputed king of AI chips, announced they were partnering up with OpenAI. And they weren't just shaking hands. NVIDIA is putting up to $100 billion on the line to build a ridiculously huge 10-gigawatt AI data center just for OpenAI's use. This news didn't just give NVIDIA a boost, it was like a shot of adrenaline for the entire AI sector.
And when a deal this big drops, the analysts go into a frenzy. Take Julian Emanuel from Evercore ISI. He's calling this a full-blown technology revolution. He even goes so far as to say that if the Fed gets too generous with interest rates, the S&P 500 could form a massive bubble and rocket all the way up to 9,000. It just shows you the level of hype and optimism this one deal managed to create.
Okay, so we have this one monster deal, acting like a giant engine, pulling the market up. But remember, most stocks were still falling. So what was pulling them down? This created a really fascinating day, with very clear winners, some obvious losers, and a few big headwinds that had investors pretty worried.
Let's just look at some of the day's big movers, because it tells the whole story. First, no surprise, NVIDIA was the star of the show, up almost 4% on its blockbuster deal. But look at Apple. It jumped over 4% on good news about iPhone demand, finally pushing the stock into positive territory for the year. Oracle had an amazing day too, up over 6% because it got a key role with TikTok. But on the flip side, you had big names like Amazon getting dragged down by those political worries. And then there's the wild card, Mesoblast, which just skyrocketed over 60% after getting bought by Pfizer. A real mixed bag.
So what were those headwinds dragging on companies like Amazon? Well, there were a few big ones. First, a proposal to increase H-1B visa fees by 100 times, a massive blow to big tech companies that rely on global talent. On top of that, you had the growing threat of a U.S. government shutdown, which always makes markets nervous. Then you had the Fed sending all sorts of mixed signals about what they're going to do with interest rates. And finally, from a technical standpoint, the market was overbought, which is basically a warning light that things have gone up too fast, too soon.
Okay, so that's the story of the day, a real tug-of-war between AI mania and some very real-world problems. But the biggest question for all of us is, what happens next? Where do we go from here? Well, it looks like there are three potential paths forward.
If we break it down by the odds, here's what it looks like. The most likely scenario, a 50-50 shot really, is that we get a period of volatility and rotation. Money moves out of the big tech winners and into other parts of the market. Then there's a pretty strong 40% chance that the AI party just keeps on going, powering through all these issues. And finally, you have the wild card, the 10% chance of a bubble bursting and a much more painful correction.
So how do you play each of those hands? Well, if you think the AI bull run is going to keep charging ahead, the strategy is pretty simple. Stick with the leaders, like NVIDIA, and buy more whenever there's a dip. If you think things are about to get choppy and volatile, the playbook changes. It's time to diversify, maybe look at some value stocks, and lighten up on tech. And finally, if you're worried about that bubble bursting, well, that's when you batten down the hatches and move into defensive things like gold and bonds.
All right, let's bring this all home. We've gone through the day, the reasons why, and what might happen next. But if you remember nothing else, I want you to focus on this. Right now, there are two huge, critical risks that every investor absolutely needs to be watching.
So what are they? What are the two big things that could really derail this whole AI-fueled rally?
Risk number one is all about politics and policy. That stuff coming out of Washington, like the massive visa fee hike or the threat of a government shutdown, isn't just background noise. It's a direct threat to the tech sector, the very sector that has been carrying this entire market on its back. These things can drive up costs and create a ton of uncertainty.
And the second major risk is this growing disconnect between the Federal Reserve and the market. Think of it like this. Wall Street is expecting the Fed to hand out a whole bunch of candy in the form of interest rate cuts. But the Fed keeps saying, whoa, not so fast. If the market doesn't get the rate cuts it's already priced in, it could throw a major tantrum. And that usually means a big sell-off. And all of this, really, boils down to one final massive question. We've seen this incredible AI narrative powered by a $100 billion deal literally defy gravity and pull the market up. But can it keep doing that? Is the AI rally strong enough to keep flying high while all these political and economic forces are trying to pull it back down to earth? That, right there, is the $100 billion question.